Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Robert from Ayondo. Robert is a sales trader. Thanks very much for coming back onto the show. Just before we kick off, can you just explain what Ayondo is, how you operate, and how you differ from what else is on offer?
I mean, we are essentially a spread betting CFD firm. But we do offer two different products. So we offer social trading and we also offer the self-directed private trading. So the self-directed private side is going to be, for your experienced traders where you're going to be doing your own trading yourself, deciding what sort of products you want to get involved in. And on the social side, it's actually we're going to be following our top traders. So we have over 1,000, I think close to 2,000 traders who are providing signals on our platform. And it's very transparent. We show from the best of the best to the worst of the worst, who might only be with us for a month, but we want to show everyone. We're not trying to hide anything. So we'll show all of these traders. The followers will then, analyze these top traders, set up a portfolio, and start following them. Now, what makes us different on, obviously that's quite a different side, but then on the self-directed side, we do have some features which make us also a little different. We do focus a lot on client security in terms of their fund security. So obviously we're regulated in the UK, so everyone's protected under the FSCS up to 50,000, but we've gone out and got an additional insurance of up to $1 million for each client who deposits with us. So you could actually have more funds protected through Ayondo if it went bankrupt than you would with a bank, which is only going to be protecting you up to 75,000. Obviously, very unlikely with a bank, but it's nice to have that protection there. And then we also offer zero balance protection, which in this day and age when you're trading with leverage and extremely high leverage, like you can with some other brokers, then it's always a good thing to have that zero balance protection, because if there's a black swan event and suddenly the market drops or spikes up and you're going the wrong direction, you could then end up losing a lot more than what's in your pocket, in a sense. Whereas with us, it's just the amount that's in the account that's at risk. So that's a really nice safety feature there.
Well, let's hope none of those events ever happen, but
exactly,
it's good to have the insurance. Now, you touched on the social trading side, and you've brought along a couple of examples of traders that your clients can actually track and follow their performance. So we start off with the first client, would you say?
Yeah, exactly. First top trader in a sense. And we've gone for we'll have a look at two different ones today, and this one is more on the low risk side, and then the other trader we'll discuss why he may be a little more on the high risk side. Okay. But they've both been performing fairly well. So this first one here exactly is MLN, and when you log on and you have a look at a top trader for the first time, this is the first snapshot that you're going to see of them. So here we can see a 1-year graph. You can see the yellow line is his performance over the year. The purple dotted line is the Germany 30. So the Germany 30 this year has outperformed this top trader, but the top trader's been a lot more consistent, a lot less volatile, and he's still getting good returns. The Germany 30 has just been on a serious run this year, so it's something that you can't always expect. But this guy has been trading it well. We can see he's got 5 flags just under his sort of silhouette there. So we rank each top trader from 1 to 5. The longer they're with us, the more flags they'll get, and they also have to meet certain requirements. So they have to jump through the hoops, so to say, and once they do that, we reward them by increasing their trader level. So to get to level 5, you've got to be trading with us for a minimum of a year to start. And then a few other features that we'd probably take a look at. In depth is the risk score and the drawdown. So the drawdown for this trader, for example, is under 8%. That's nice low drawdown. If he's returned almost 15% this year, that you're not going to be in too much trouble.
Yes.
And he's got a risk score of 1. So we'd rank them 1 to 4 would be low risk, 5 to 7 is medium risk, and 8 to 10 is then deemed high risk as a trader. That's just looking at sort of the trade size, the risk that they're taking on each trade, and the exposure in the market. It's not looking at any of the P&L or anything like that. So really just the risk.
And can we drill down, I believe you brought a slide of his transaction history, so just to get an idea of how they're operating and what they're doing. Just talk us through this. Obviously, it's the German mid cap that's his focus,
yes,
or her focus. Just talk us through the transaction history briefly.
So I mean, again, when analysing a trader, it's always great to have that back history, right? You know, if you're looking to invest in a hedge fund, you need a lot of back history to do so. So we provide every single trade they've ever executed with us. And what's great about that is you can have a look at this trader and see, okay, he had that 8% drawdown. Where did it happen? Why did it potentially happen, and how did he react afterwards?
Yes.
Because you can make sure that there's no emotional trading thereafter. They've kept to their strategy, and that's what we can see here. So exactly, you know, in the first column we've got the German mid-cap futures. You know, he's trading always at a unit size of 0.55, so 55 cents a point. And then we've got the stop loss, which they always have to enter a stop loss. He sets very, very wide stop losses, or he or she. And then on the opposite side of the spectrum, on the other side of the columns, you've got RPT percentage just in front of the take profits there. And so he's taking about 3.5% risk on each trade, which is a fair amount. But that being said, it also depends how many trades they have running. If they've just got a single trade running, or if they have 20 trades running, then you're going to have a lot of different exposure levels. So as long as he doesn't, or she doesn't hold too many trades, then certainly, you know, you're not going to be risking too much on the account, and that is based off of a stop loss at 17,000, whereas the current price is around 26,000. So that's a big drop to get there.
And then we can also see just briefly there's not what I'd call over trading. We're looking at 2 or 3 trades a day. It's not
exactly
over trading, which is obviously not good on return unless you are actually a very good trader and making money almost every time.
Exactly, it's much harder to read a shorter term market. You know, they're going off of, you know, they're probably going off of technical analysis as well as a bit of fundamentals there, because they are doing some longer term holds as well as some shorter term holds. And when you're actually on the platform here, if you hover your mouse over the close date, you'll actually see the open date as well, so you can really get a spectrum of how long they're holding your trades. And again, that's going to affect you because you're going to have dividends, you're going to have financing, things like this are going to account into the cost of the trade. And you'll notice that next to each of the profits shown for those trades, there's a little plus sign. You just hover over that or click on that, and it will show you then the full amount. You know, if a dividend's been applied, you're actually gaining more from that trade, and it will then show it there, but we're just showing the raw profit from that trade.
Okay, moving on to the next trader. Looks like they're doing very well this year. Why?
Yeah, that they are.
What are they doing that I'm not doing?
So, well, this is why we brought this trader in, actually, is because as of about June this year, from March maybe even, we have brought in cryptocurrencies onto the platform, you know, which seems to be all the rage this year. Everyone's very intrigued by it, a bit of the dot-com bubble of our generation here.
Well, hopefully not a bubble.
No, hopefully not a bubble, exactly. Hopefully we're just seeing the beginnings of it. And this trader actually started trading it, funnily enough, in June. And you can see down in 2017, June, he actually had a negative month. So, you know, didn't start off too well when first entering Bitcoin, but he's really got a knack for it. And is doing very well. It makes up about 50% of the assets he trades, but we can have a look at that later.
I think we've got a breakdown of that.
But that's why he's performed so well, really through the growth of that. It's grown a lot this year. But again, that's why I initially said this trader may be a little bit more risky, because there's so much volatility on Bitcoin. You know, and exactly, it makes up 50% of his portfolio here. It is quite a lot of trades and quite a lot of exposure to Bitcoin. But he seems to be trading it very well, and it has been, you know, growing significantly fast over this year. I think it's up about 1,000% or so. So we're starting at just under 2,000 now, above 10,000. So it is a very interesting product to be involved in, and this is a way to get exposure to it if you're not, you know, involved in the investment space or you're not aware of cryptocurrencies.
So is this trader buying Bitcoin outright?
No, he's not. So he's buying it as, exactly, so he's buying it as a CFD or a spread bet, depending where on the world he's living. And as you as a follower, you would be then trading this product as well as a CFD and a spread bet. And that does provide some advantages as well, rather than buying it outright. You know, if you're going to an e-wallet and things like this, in the past there has been fears exactly of, you know, your accounts being hacked and Bitcoins being stolen, whereas we actually, as the broker, would then carry that risk because you're just trading as as a CFD or a spread bet. So that's a nice safety net to have. You have the option to trade it as as a leverage product, although it's quite a risky product, so maybe that's something that you want to avoid. And then Ayondo can offer you that as an option as well. Even on our private trading accounts, we do have Bitcoin currently, and you could trade that unleveraged if you wanted to. And that way you get involved in that investment space as well. Again, you've got that zero balance protection if you're trading it leveraged. So there's a lot of different features which are quite nice if you're looking to get into the cryptocurrency space or investments, and by doing it through a CFD or spread betting brokerage, rather than going through the e-wallets and going through the hassle of that.
Good stuff. And I think we've just got one final slide with regards to this particular trade. And again, it's not the transaction history. This is the open positions, just breaking down
it is
what is currently running, and just explain briefly what this is and what it actually means to potential followers and viewers.
Of course, exactly. So here we have all the different products he's trading or she's trading. Meister Trading, unfortunately, is having a negative month this November, as they did previous November. But we can see sort of what the losses are and the risk that they've been taking on those trades. I think these are the open positions that they have running now. So you can see they're short Bitcoin at the moment. And what we can see is their entry price even. So the price that they got into the market was about 10,800, 10,600, and going all the way down to about 9,366. We saw last night it dropped to about 9,500. So I'm hoping they've closed out some of those trades since then. And then we can see the other products that they're trading as well, the Germany 30, the silvers, and you can see what direction they're trading by the direction of the arrow next to the name. You can see where they've got their stop losses with the red figure there, and sort of what P&L they're running on each of those trades. So you get a very good overall scope of what they're trading, and if you decided to follow them, you'd have the option to enter all of those trades at current market level, or scrap those trades and just start following from any new executions that they do, which is nice. But yeah, so currently they're just trading Bitcoin, but we do have other cryptos coming in. So on our demo accounts, they're actually pricing. We're just in the process of getting the feeds ready for our live platform. So then hopefully we should have Ripple Coin, Litecoin, Neo, Dash, Ethereum. So getting a lot of the very popular cryptocurrencies on the platform as swiftly as possible. That's what everyone seems to be demanding at the moment, and we want to make the customers happy. So just a matter of getting that to them.
Well, good stuff. Good to hear you, mate. You want to make the customers happy. That is very important in business. Very exciting space to be in. But in the meantime, Robert from Ayondo, thank you very much for coming in today.
Cheers.